What do you do when the market panics? Follow the crowd or look for opportunity? Trump's tariffs are back and investors are running from everything tied to China. But is that a mistake? Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. And right now, fear is everywhere. In this video, we'll discuss why the stocks everyone is avoiding might be your biggest opportunity. So let's dive in! Market swings between optimism and fear, greed and panic. Right now, fear is winning. Investors are dumping US stocks that rely on China and Chinese stocks that depend on US demand. But here is the thing. Following the crowd rarely leads to big returns. When uncertainty hits a sector, investors overreact, and it happens all the time. In 2018, during the last trade war, Apple stock tanked. Analysts said tariffs would destroy its margins, and investors panicked. But those who ignored the noise saw the stock gain about 500% in the years that followed. Now, we are seeing the same fear cycle repeat itself. Stocks tied to China are not crashing because they are bad businesses. They are crashing because investors hate uncertainty, and that's when opportunities emerge. People say China is uninvestable, and for me, that's a signal to start paying attention. Howard Marks put it best. The best opportunities are found among things most others won't do. Most investors are stuck on first-level thinking. Tariffs will raise costs for US companies relying on Chinese manufacturing. That hurts margins and profits. But second-level thinkers go deeper. Not all companies are affected the same way. Some have already moved their supply chains to India and Vietnam. Others, like Apple and Tesla, have pricing power. They can pass costs to consumers without losing market share. Recently, I listened to the earnings calls of Five Below, a discount retail chain that depends heavily on China for sourcing its products. During the call, their chief operating officer explained how they are adapting. We have a sourcing office over in India that's going to be able to help us. So we have boots on the ground to help us, whether it's existing vendors within their countries or shifting countries and vendors. This is a type of thinking that will separate companies that will struggle from companies that will thrive. And you want to be invested in those companies because what matters is what is happening at the micro level, at the business level, and not what is happening at the macro level. I get that being a contrarian is not comfortable because the best investments often feel like catching a falling knife. But smart investors do not just buy cheap stocks. They buy quality assets at unfair prices. Here's what to look for. 1. Companies with real earnings power, not just hype. 2. Businesses that have flexibility, whether in pricing power or supply chains. 3. Stocks that investors are selling not because they are bad, but because they are unpopular. The best investments are not just cheap, they are misunderstood. Most investors wait for certainty, but by the time the dust settles, the bargains are usually gone. Trump's tariffs are shaking up the market, and most investors will run from the chaos. But if you are smart, you know that chaos creates opportunity. So, what will you do? Let me know in the comments. This is it for today, guys. If you got value from this video, feel free to drop a like. And if you want to receive more contents like this, feel free to subscribe. Thank you all and peace out.